When should you buy stocks? Welcome to Be a Baby Billionaire. Navigating the complexities of the stock market can be daunting, but understanding when to buy stocks is a critical component of successful investing. This comprehensive guide explores various factors and strategies that can help investors make informed decisions about stock purchases. From economic indicators and market cycles to company earnings reports and interest rates, each aspect provides valuable insights into the optimal timing for buying stocks. Additionally, we delve into the impact of political and economic events, industry and seasonal trends, and the importance of technical analysis. By leveraging these diverse factors, investors can enhance their ability to identify lucrative opportunities in the stock market. 1. Economic indicators and stock buying. Economic indicators like GDP growth, unemployment rates, and inflation play crucial roles in stock buying decisions. When GDP is growing, it often signals a healthy economy, leading to increased corporate profits and higher stock prices. Conversely, rising unemployment can indicate economic trouble, potentially lowering consumer spending and corporate earnings, which may drive stock prices down. Inflation affects purchasing power and interest rates. Moderate inflation might boost stocks by indicating healthy demand, while high inflation can erode profits and lead to tighter monetary policy, often negatively impacting stock prices. 2. Market cycles. Market cycles, characterized by periods of bull and bear markets, greatly influence stock purchasing timing. In a bull market, characterized by rising stock prices and investor optimism, buying stocks can be rewarding as prices generally increase. However, during a bear market, where stock prices fall and investor sentiment is pessimistic, buying opportunities arise for those who believe prices will rebound. Understanding these cycles helps investors time their purchases to buy low during downturns and capitalize on subsequent recoveries. 3. Company earnings reports. Company earnings reports are significant signals for stock buying as they provide insights into a company's financial health. Positive earnings reports, indicating higher than expected profits, can boost a company's stock price as they reflect strong business performance and future growth potential. Conversely, negative earnings reports can lead to stock price declines. Investors often look for companies with consistent earnings growth or those beating analysts' expectations as indicators of a good buying opportunity. 4. Interest rates. Interest rates have a profound impact on stock market performance. When interest rates are low, borrowing costs decrease for companies, which can lead to increased investment and expansion, boosting stock prices. Low rates also make stocks more attractive compared to bonds, driving more investment into the stock market. Conversely, rising interest rates increase borrowing costs and can reduce consumer spending and corporate profits, often leading to lower stock prices. Therefore, investors closely monitor central bank policies and interest rate trends to inform their stock buying decisions. 5. Political and economic events. Major political events, such as elections, policy changes, and geopolitical developments, can significantly impact stock buying opportunities. Elections can lead to shifts in government policies, influencing sectors like healthcare, defense, and energy. Policy changes, such as tax reforms, regulations, or trade agreements, can affect corporate profits and market sentiment. Geopolitical events, like conflicts or international agreements, can also create market volatility. Investors often adjust their strategies based on anticipated and actual outcomes of these events to capitalize on potential opportunities or mitigate risks. 6. Industry trends. Identifying and capitalizing on trends within specific industries can lead to profitable stock buying opportunities. Industries often experience growth cycles driven by technological advancements, regulatory changes, consumer preferences, and macroeconomic factors. For example, the rise of renewable energy, advancements in biotechnology, or the growth of e-commerce present investment opportunities. By staying informed about industry trends and identifying companies well-positioned to benefit from these developments, investors can make strategic stock purchases to capitalize on long-term growth potential. 7. Seasonal trends. Recognizing and leveraging seasonal patterns in the stock market can enhance stock buying strategies. Certain sectors and stocks exhibit predictable performance fluctuations based on the time of year. For example, retail stocks often perform well leading up to the holiday season, while agricultural stocks may see gains during planting and harvest periods. Additionally, historical market data shows trends like the January effect, where stocks tend to rise in the first month of the year. Understanding these patterns allows investors to time their purchases to take advantage of predictable market movements. 8. Technical analysis. Using chart patterns and technical indicators to determine optimal buy points is a key strategy in stock trading. Technical analysis involves analyzing historical price movements, volume data, and various chart patterns, such as head and shoulders, double tops, or triangles, to predict future price movements. Indicators like moving averages, relative strength index, RSI, MACD help identify overbought or oversold conditions. By leveraging these tools, investors can make more informed decisions on when to enter or exit positions. 9. Valuation metrics. Utilizing valuation metrics like price-to-earnings, P/E, ratios, and dividend yields is essential for assessing stock value. The P/E ratio helps investors determine if a stock is over or undervalued compared to its earnings. The P ratio, which considers a company's growth rate, provides a more comprehensive valuation. Dividend yields indicate the income generated from dividends relative to the stock price. Together, these metrics help investors identify stocks that are attractively priced relative to their financial performance and growth potential. 10. Market sentiment. Gauging investor sentiment and its impact on stock prices is crucial for making informed investment decisions. Market sentiment reflects the overall attitude of investors towards the stock market, influenced by factors such as economic news, earnings reports, and geopolitical events. Positive sentiment can drive stock prices up, while negative sentiment can lead to declines. Tools like the Fear and Greed Index and sentiment surveys help investors understand prevailing market moods, enabling them to anticipate potential price movements and make strategic buying decisions. 11. Insider buying. Interpreting insider buying and selling activities can provide valuable signals for stock purchases. When company executives, directors, or employees buy shares, it often indicates their confidence in the company's future prospects. Conversely, insider selling might suggest potential issues or a lack of growth confidence. Monitoring these activities through public filings and insider transaction reports helps investors identify stocks with strong insider support, which can be a positive indicator for future performance. 12. Diversification strategies. Diversifying your portfolio is a fundamental strategy to mitigate risk and inform stock buying decisions. By spreading investments across various asset classes, sectors, and geographical regions, investors can reduce the impact of poor performance in any single area. Diversification helps manage risk and stabilize returns, as gains in one investment can offset losses in another. Understanding the principles of diversification allows investors to construct a balanced portfolio, enhancing long-term stability and growth potential. 13. Market corrections. Identifying and taking advantage of market corrections can create lucrative buying opportunities. A market correction, typically defined as a decline of 10% or more in stock prices from recent highs, often reflects temporary market overreactions rather than fundamental weaknesses. Savvy investors view corrections as chances to buy high-quality stocks at discounted prices. By analyzing the underlying causes of the correction and assessing the long-term prospects of affected companies, Investors can strategically enter the market and position themselves for potential rebounds. 14. Global economic trends. Understanding global economic factors and their influence on domestic stock markets is crucial for informed investing. Factors such as international trade policies, currency exchange rates, geopolitical tensions, and global economic growth can significantly impact domestic markets. For instance, a strong global economy can boost demand for a country's exports, positively affecting its stock market. Conversely, global economic slowdowns or trade disputes can harm domestic companies with international exposure. By monitoring global economic trends, investors can better anticipate market movements and adjust their strategies accordingly. 15. Investment horizon and risk tolerance. Aligning stock purchases with your investment goals and risk tolerance is essential for a successful investment strategy. Your investment horizon, whether short-term or long-term, influences the types of stocks you should consider. For example, long-term investors might focus on growth stocks with significant potential over time, while short-term investors may seek more stable, dividend-paying stocks. Additionally, understanding your risk tolerance, how much risk you are willing and able to bear, helps in selecting appropriate investments. Balancing these factors ensures your stock purchases align with your financial objectives and comfort level with market volatility. 16. Dividend growth investing. Focusing on companies with a history of increasing dividends over time is a strategy for identifying stable and growing investments. Companies that consistently raise their dividends demonstrate strong financial health, reliable cash flow, and a commitment to returning value to shareholders. These characteristics often signal long-term stability and growth potential, making such companies attractive to investors seeking steady income and lower-risk investments. By prioritizing dividend growth stocks, investors can build a resilient portfolio that benefits from both capital appreciation and regular income. 17. Economic moats. Identifying companies with strong competitive advantages or economic moats is key to finding long-term profitable investments. Economic moats refer to a company's ability to maintain competitive edges over rivals through unique assets, cost advantages, brand strength, or network effects. Companies with wide moats can sustain higher profit margins and fend off competitors, making them resilient during economic downturns and poised for sustained growth. Investing in such companies helps investors secure stable returns and protect their investments from market fluctuations. 18. Summing up, informed stock buying decisions require a multifaceted approach that considers a wide range of factors. By understanding and analyzing economic indicators, market cycles, company performance, and interest rates, investors can better time their stock purchases. Recognizing the influence of political and economic events, industry trends, and seasonal patterns further refines the strategy. Utilizing technical analysis and valuation metrics, along with gauging market sentiment and insider activities, provides additional layers of insight. Moreover, considering diversification strategies, market corrections, and global economic trends ensures a well-rounded investment approach. Ultimately, aligning stock purchases with individual investment goals and risk tolerance, and focusing on dividend growth investing, market liquidity, and economic moats, empowers investors to build robust and resilient portfolios. Time for the soft question. Under what circumstances and conditions do you buy your stocks? Please share your thoughts in the comment section below. This will help everyone learn and grow together. Subscribe with us and learn. If you find the information in this video valuable, please subscribe and share it with family and friends. Your support will help us create many more high-quality videos like this. Please support us. Please hit the like button and the notification bell to be notified. Click on these two videos shown here to explore even more. The contents of this video are for educational and informational purposes only. Thank you for watching.